not TGIF. Welcome viewers from investing.com. How are you, everyone? So I want to start off with the yen, US dollar yen. On a weekly basis, it's trying to put in a reversal week. We've come off from what could be important resistance. I had this green line here. And if we start taking out 108.15 or so, we're on our way to 108.80. Actually, believe that we could even trade up towards this 109 level and take this out. Eventually, I think we're going to work our way up. I know it's a contrarian view, and maybe I'm wrong, but if we get through 108.16, measures up to about 940. Eventually, as I look at this, is that I think that we could have a significant low, higher low than the flash crash low, trading a little bit above 61.8. Thought maybe we could go 78.6, but not sure that's going to happen. And if we get through this high at 108.15, I'm going to declare a low in. Actually, if you want my weekly view on this, I think there's a shot down the road for 120. But one step at a time. You see this confluence right here around 111. That was a gap that we left on the way down. So that will really be the first major test for what I'm talking about in here. Okay, people are raising their hand. Okay. I don't see any questions in the chat box or open questions. Okay, taking a look at the Dixie. Think this is going to hold in here for a rally back to 670, 680, maybe even 60, back to 97 up in here. So think that there's still a chance that we're going to move up. The other scenario is that if we go for these lows at 580, it will not confirm. Everyone with me? And you know, all the rallies haven't been holding in the S&Ps. You know, I'm finally hypnotized looking for 3,000. Maybe it's not going to happen. Maybe this was enough. But again, I'm not ready to probe the short side here yet. If it goes, I guess it'll go without me. And I think what happened yesterday in crude was significant. I got stopped out by the last candle right here. But we came off pretty good. Perhaps there's another run. I'm leaving it alone now. This almost looks correct at ABC, and maybe we'll still make a move up towards $60. So flat on that, and we may as well get to the metals. Okay, we're having some technical difficulties.
I can hear you fine on Zoom. I'm seeing that YouTube and Periscope are having some issues. So
okay,
but I just want to let you know I can hear you just fine.
Okay, buddy, thank you. So 275 was a big area, and I know the guys here on the team liked it down here for a rally to 275. Look at this: 1, 2, 3, heading back down again. Big picture to me, unlike gold, bear market rally, right? Back to resistance. See this pivot right here, 275, 275. I think copper's destined to take out these lows. So I think this was a pretty negative week in copper. So there you have something, you know, an industrial metal that's been feeling the heat of the narrative of a global slowdown because of multiple reasons. But copper looks like this bear market rally completed up here at 275. I think you could look for lower levels. In fact, if you really start getting macro with copper, here's your weekly, you know, it held this 200-week moving average down here for the bounce, didn't even get back to the 50-week. That's 277. But, you know, I think we're going to be gunning for these lows down here at 254. And if we take that out, 220 coming in copper. So copper is still not reflecting any type of strong economy. I think it's probably a pretty good reflection on what's happening in China. So be careful with bullishness on that. And then let's get to gold. You know, you look at it, and yes, this is a major breakout at 1375. Some people have it lower at 1368. But, you know, from where we started earlier in the week, we're off $36 from the high. A lot of people, of course, would say, you know what, I'm going to buy a pullback at 1400. So they're probably trying it here. I think the key is going to be this green line at 1375. Gold cannot, to keep the bull case going, in my view, negate this breakout. So we'll see if we get a test of it or not. If 14 doesn't hold, you basically have a $40 range, right? And we take out 14 and you subtract 40 from it, it's going to give you about 1360. So we'll see. Silver has been weaker than gold. I mean, it's pretty obvious when you look at the weeklies. Gold blowing past all these highs and silver stalling here. Silver doesn't look too good to me either. That was a preferred short because of its weakness. And again, to me, it looks like it's setting up some type of descending triangle. Here's the look. And after this, I'm going to turn it over to Blake. Get rid of this. So you have this. Something like this. Okay. So you have your flat bottom, you have a descending top. Could we make a move up towards 1545? It's possible. But you look at this formation, it's actually a pretty good reversal formation. And let's call the range 15, 15, call it a 40-cent range. So under 15.15, you're looking at 14.75 again. Okay, so be careful here. It's possible we blow off to the upside, but the fact that we're hitting support multiple times, one, could count these as a couple, two, at least three times, I think that rallies back towards 1530-ish are going to have some trouble here. Okay, so there's your descending triangle, and a breakdown in silver is going to take it to this moving average, maybe here. And then you go 1470 from 1550 is going to give you $14. So I guess I'm a precious metal bear, and part of it has to do with, I think that the US dollar yen is putting in an important low here. So we'll see how this pans out over the next week or so. And at this time, it's really nice to be able to hand it over to a guy I used to only be able to interview once in a while. And that's my contemporary Blake Morrow. Blake, how you doing today, buddy?
Hey, good morning, Coach. How you doing?
Good, bro. So kind of a quiet week, don't you think?
It has been a very quiet week thus far. Today, we're looking ahead to a couple of things today. First of all, the GDP numbers today might be a market mover. It's
Okay.
it's the end of quarter, end of month to the end of this week. So, the market is looking ahead to some potentially some preliminary readings that we're getting is some dollar selling coming in.
Okay.
So, that could.
And G20 this weekend?
Yeah, we got the G20 this weekend. Everybody's expecting, China and the U.S. to stand down a little bit. At least that's the base case scenario. So, the guys in my office have been noting that there's only, an hour and a half meeting between Xi and Trump. So, chances of them hammering out anything, significant, probably not too high. So, expect some, just some dollar selling just from month and quarter end, and that's keeping the euro very well bid. I want to point out that the euro dollar, and this is the euro right here. You can see how we are holding the breakout point. The breakout point being 113.50. As I explained yesterday, any dip between 113.50 and 113.30 should find some good buyers. This is the these are the levels where you're going to find some buyers, but we haven't even been able to dip below 113.50. I had bids overnight down here, and none of them even got tripped. I mean, I had I had a 45 bid get 2 pips away from the lows, and then it bounced. And so the euro, I have to note, has been very buoyant. The pullbacks have been extremely shallow. So you think about that while you're trading. Think about the fact that the euro is just not pulling back. Now, another specific move that I think is very important is gold. Gold's holding the 38% retracement. I've been waiting for a little dip below 114 to get long some gold, and it's just not dipping. And remember, we are in major breakout territory. So what I did is this morning I started buying a little bit. I bought some, and I'm going to buy a little bit more, even if it dips below 114. Now we do have GDP numbers coming out, so that's important to note that we have the GDP numbers that will be out this morning, and they're going to be out in about 19 minutes. And we're looking for GDP to come in at 3.1%. Probably arguably the more important numbers are going to be the PCE numbers tomorrow. But any type of strong data, I think, is going to be met with demand. So what I mean by that is even if it's a strong data point and the euro dollar gets a little push lower, you're going to see buyers emerge down here at 113.50. So be really careful trying to be too bullish the dollar here, especially with all the month end, quarter end rebalancing going on, and with the potential that the US and China are going to stand down a little bit over the weekend over the G20. One of the things that, as a FX trader, one of the things that you've got to realize is that if things simmer down a bit, that's typically not going to be bullish for the dollar. That's going to be more bearish for the dollar. If things heat up, obviously the dollar might take that role on as a safe haven currency. But I don't know. This trade war has been dragging on a little bit, and to see how the dollar reacts is going to be really interesting moving forward, because I don't know if the dollar is going to be looked at so much as a safe haven bid moving forward. If this trade war, because it's predominantly U.S. and China, so and U.S. and everybody for that matter. So
President Trump would like to do a trade with the ECB, like to trade Powell for Draghi.
Yes, yeah, that's obviously
it's like baseball season. I wonder if there's going to be a cash
Draghi's free here in the next couple of months. So in October, I believe. So
I didn't think of that. Maybe he will be.
Oh, we've seen crazier things happen over the last few years. It's not that wouldn't surprise me in the least bit. Could you imagine? Holy cow. Yeah. Anyway, hold on one second. Let me just get a sip. Okay. One of the other standout currencies that I think that is really worth noting here is the dollar Canadian. The dollar Canadian has been extremely weak. This has been rather surprising to me that we've seen such weakness in the dollar Canadian. Not the fact that the Canadian is stronger as a currency, but the fact that it has been rallying. And if you look at crude prices, and yes, we've gotten a bounce here in crude, but when crude was selling off from this $66 to $50 level, I'm surprised that the dollar Canadian, it really has spent most of that same time going from 135 to 131 and change. I think this has caught a lot of traders off guard a little bit. And the fact of the matter is, if you take the dollar Canadian and you thinking where we could go, I think a move down towards the 129 level is not out of the picture. I don't think this is, impossible now. And I would have thought that no, there's no way we're going to get back below 130, but the dollar Canadian has been trading extremely heavy, and if the dollar continues to stay under pressure, and we see this euro, push up to 114.50 and 115, I think there's a good chance, as long as we're not seeing a huge sell-off in equities, this is a good chance the dollar Canadian makes it down towards these levels. We are back below the 200-day moving average, and we're, like I said, we're trading really heavy, and there's got to be stops building now at this point below this 130.50 level. And I would assume that this is a straight shot between 130.50 and 129 and change, if we break, because I'm assuming no one else thinks that we're going down there. So this is something that I think has to be on our radars as we go into month, quarter end, weekend. So just keep an eye on the Canadian as well. But yeah, my 2 cents is I'm going to be just watching this euro dollar. And let's not also forget. Now, one of the other things that I wanted to mention here is this is the 200-day moving average. You can see the 200-day moving average is supporting price on every dip. So that's one of the reasons why I still believe that any move, any move lower is going to find some support down here. Even if we push just below these lows, I still think that the buyers will emerge. Matter of fact, let me do a little bit of work here. So here's the minor downtrend line that we should watch. Obviously, if we make a break above, let's just call it 113.85 this morning, then you have to start looking at a target of going into new trend highs. 114.45 has been my long-standing target here. It's 161% extension, so that I think is doable today. Possible, but I'd say possible, but not likely for today, unless the GDP numbers are extremely weak, which I'm not anticipating. But here's your support. Really, it just comes right through here, and if you just look at it technically, it's a pennant. I guess I should be a little bit more. Let's do this. Make that blue. The pen is blue. It is blue. It's reference to liar liar. Here's the here's maybe the bottom of the pennant. Let's go to blue. Let's make it a little thicker, and let's do this blue, a little thicker as well. And you can see that pennant really, I think, is developing. And if you start looking at what the upside targets are to that, if we really start to move, takes us past the 618 retracement, which comes in at 115.40. And then obviously this can stretch all the way up into the 70s, and this is where this is probably your sell zone. If it really starts to break out, your sell zone is somewhere up in this neighborhood ahead of the 618, and as far as the pennant target, if we really start to move. So again, these are things that I'm taking into consideration going into month and quarter end. Let's watch the data going into today. Is it a weak GDP number? Do we have weak PCE numbers? Remember, the Fed has been mentioning that the underlying numbers that they're seeing is starting to raise some flags, and that's what they're getting from their business contacts, their internal calculations and data that they get that maybe isn't so much reported to the public. So and that's why their dovishness over the last meeting has really gotten the attention of the market, and why the market's starting to price in some rate cuts here. So okay, so just a few things that that I'm looking at, and then also I guess one of the other things we should probably pay fairly close attention to is what's happening in the cable. The cable has actually been, believe it or not, pretty well bid today. We still overall, I mean, I look at this pair, and I want to be bullish. Believe me, I want to be bullish because I am overall bearish the dollar. I'm bullish precious metals. I actually want to be bullish the cable. The pound was up a little bit this morning. One of our guys in our chat room asked, was there any news? And I don't think there's any specific news of why the cable's higher, but I'm not getting bullish the cable specifically until we get a nice close above this 127.70. If you read the analysis on ForexAnalytix every day, pretty much every day at the end of the day, it's all big rejection of the 127.70 level, exposed to move back to the 126 level, possibly blah, 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 blah. Just 127.70. That's a big deal. It's a big deal, period, end of story. It's this big resistance zone, and we just have to break it and hold it. And if we break it and hold it, I'm going to get bullish the cable. And does it mean that the pound's going back to 134? No, not necessarily, but I think that there's going to be some upside there. Now, it's not just the pound dollar though. I want to take you over to the pound yen. I bought at the end of the day yesterday. I bought a little pound yen. It wasn't anything to really write home about. I bought a little bit because I'll go over I'll go over the charts here and what I'm seeing. I bought a little bit and then I sold it, and I didn't stick around. I didn't want to hold it last night. I went to go see a movie with the kids and the family, and it's up, little stronger this morning. But one of the things that I keep looking at with the pound yen is this major divergence, right? This major divergence in price. Then on top of it, I was, looking at the cable, and the cable's holding up, and I was thinking, man, after the reversal we saw in bonds yesterday, I was thinking, well, maybe these yen pairs might have a little bit of upside in them. And of course, I should have stuck around in the pound yen longer. I think I made like 15 pips and then just walked away from it. I didn't even tell anybody that I was doing it. It was one of those, got in the pound yen. At the end of the day, as I was doing analysis, sold it in Asian trade and just, booked profits and walked away. But that divergence in relative strength really kind of has my attention. And if the pound yen really starts to get a move above like this 139 level, or you can even say 138.50, you gotta start watching for a possible squeeze here. So, no matter if you want to trade the cable pound dollar to the upside, or maybe you just want to leave the pound dollar alone while it's below that 127.70. But if you think that these yen pairs look like they're going to get a little bit of a move, and it's just not the pound yen as well. It's the dollar yen completed a double flag formation, first flag, second flag. We came within 20 pips. So whenever you're that close, it's, as far as I'm concerned, completed. Relative strength was divergent. We got a bounce. And remember, the bond market, if you look at bonds, the bond market is looking like it's reversing here. It's not just bonds, it's boons as well. It's just, fixed income just in general. If you get a little bit of a reversal here and bonds come down and yields go up, that's going to take those yen pairs higher. So, if you say, well, I just don't even want to deal with the cable, then I'm going to just go ahead and trade with the pound yen. I think that's one that you should keep an eye on as well. So just a few things that I'm looking at this morning while we're waiting for the GDP numbers. I want to bring in my colleagues, Steve and Stelios. Stelios, are you even here this morning?
Yes, we are, but we need a little bit of time, like if possible.
Yeah. What are you're working on some issues, huh?
Yeah, if you can, keep on going for 5 minutes would be good.
For another 3 hours, and then we're good.
Okay.
Just a couple of more minutes, please.
So I guess these guys are dealing with the sound issue.
No, sound issues fixed. Now we have another issue.
There's other issues. Okay, so anyway. Okay, so just ahead of the numbers, let's just take a real quick look at some of these majors. So the Aussie, pretty bullish. We had this very big divergence in price. You got to watch the Aussie if we start making it above 70. Think about China, US inking a deal. That happens, we get back above this, nice solid move above 70 and a quarter. That could really start to squeeze. 200-day moving average doesn't even come in until 71 cents. That's something to keep an eye on. Also, the Kiwi, we got a double bottom. If you read you don't even have to be a ForexAnalytix subscriber. Okay. You don't even have to be a ForexAnalytix subscriber. You can just go to the to the blogs and at least get the chart of the day every day, and you can see the Kiwi. We got a double bottom building here, and that double bottom could really take us take us actually quite a bit higher. 200-day moving average, 50% retracement coming right into play. These levels break, things can get a little bit squirrely for the bears. We talked about the Canadian dollar mex, nothing's happening there. Swissy, the Swissy is just it's trading heavy, but any risk aversion is going to add to that. And then and we talked a little bit about the dollar yen, which is basically sideways. Now, Coach, are you here?
Yes, buddy.
Okay, so we talked about gold this morning and about what gold is doing. It's holding up above the 1400 level. You notice that silver hasn't really. I mean, silver is not anywhere near where gold. It hasn't made the gains that gold has on a percentage basis. Yeah. How do you decipher that?
Maybe because it's more of a cousin to copper as an industrial right now, and people are moving towards the pure hedge rather than poor man's gold. Poor man's gold is going to catch on later. Actually, I think that silver is acting lousy. It was an easier short than gold on Monday because of the reasons you just stated. So until it proves itself, I still think that there's going to be some weakness in silver. And if we're getting a yen bottom, I just saw your yen chart, Blake, and it looks like if we take out today's highs, there's more to the upside. And the yen has been correlating pretty well with the precious metals. So the yen low and the short-term high in precious metals came the same day or within 24 hours. So if there's a major yen rally here, it may have people wrong-footed. I mean, you can't fade gold unless it negates the breakout long term, and that's way down in what, 1375?
Yeah, 1375, 1380.
All right, so you buy breaks, and just keep in mind that the yen might be turning, and if we take out 1375, it certainly will have a lot of people wrong-footed. But the yen gives me caution and pause on the precious metals.
Yeah. Now the flip side is if gold or if silver breaks above like these trend highs, which is 1560.
Yeah.
And then we start challenging 16, and then it's all.
Yeah. I mean, it's an ever reassessing process trading, isn't it?
Yeah.
But what we have is right now, and then if the happens, we have to adjust and flip. WD GAN. If you don't learn how to change your mind, you won't have any change left.
Now look at the beat down in silver. Since 2011.
Forever.
I mean, it's been just a beat down situation. So a move above 16 would be extremely bullish silver if it ever happens.
Yeah, and the gold silver ratio made new all-time highs this week with what happened in gold. That huge, like $40-50 rally with silver doing nothing.
And I've learned over the years that you really want that to be flipped for precious metals to have any sustained type of gain. So let's go over. The number should be out here in 20 seconds. Here we go. Let's grab our. Oh shoot! Where did my? Oh, I took it off. No. I hit the wrong button. Oh crap! We're gonna have to go this way. All right. There's the data flash.
Oh, you subscribed.
Okay, GDP, comes in at. I'm actually looking at Bloomberg right now, and so it came in a little bit and just in line, basically. So we're just not seeing any reaction here.
A little bit in the yen here.
Dollar yen starting to get a little bit of a bid.
Blake, thank you. We got it. We got it all sorted now. Thanks for it.
Okay, I'm gonna have to flip it over to you guys. All right.
Okay,
Good
bro.
luck, everybody.
Sorry,
All right, good hunting, Blake.
I'm taking the screen.
Oof. All right.
Yeah.
Cecil D. DeMille.
What is that?
Oh, he
What's
was a
that?
famous producer.
Oh, hey, we're too young for that.
US core prices higher, US GDP deflator lower. Other than that, the quarter-on-quarter final GDP, as expected, the same deal with initial jobless claims. I mean, 227 versus 220s. That doesn't play any role at all. Okay, what else? What else do we have before we jump on the charts, Stelio?
I'm a bit. Hold on, let me think. Well, actually, let's see. Yeah, there wasn't that much happening overnight. Actually, we still have more. There was more talk from the US and the China side. I'm not going to mention anything because really there was nothing new. We remain on this quote from yesterday: the 90% deal is done, but it's clearly not done until it's 100% done. We had some numbers out of Germany. German CPI came in 0.1% better than expected. Really, nothing huge or market moving. So. I actually don't have anything to say.
Okay, mate.
Yeah,
Okay.
we just have some more numbers in an hour and a half in out of the US, but really nothing extraordinary.
Okay, perfect. So let me open the Q&A and everything else, and then we can start going through the charts. Coach, any questions?
Just want to take a look at what you're showing in the end here, and if you think we're starting to get some signs of a turn here. We're higher on the week, but you need closes back over your blue. Where's the blue line come in, the breakdown of that triangle? 108.70.
Yeah, it's headed towards 109, every day
All right.
moves a little bit higher. I do think that, a move above 108.80, something that is going to be enough to show that, we never actually broke down from this huge triangle, because obviously, such an event should come with the volatility that we saw in the gold breakout, for example. Right. And this is not the behavior we've seen so far, from the USD yen.
Well, sometimes, Steve, these long-term formations, sometimes the first breakout is a fake out.
Might be the case.
I've noticed. Yes. So we'll see.
Yeah, absolutely. Now, we did show the day before yesterday that some of the yen pairs were making moves, and they indeed ended up making them. I was very, very skeptical that they would play out, but I had to note them because from a technical perspective, we had some nice wedges, etc. And, sometimes you're skeptical about a move, but, the technicals are the technicals, and sometimes you might be hesitant, but, a technical formation ends up playing out just fine, like the one here in the Aussie yen that you see. Nice breakout from this wedge. We showed that the day it was actually breaking out. Nice breakout in the Kiwi yen. We actually showed that before it broke higher. And now keep in mind that Kiwi yen is exactly at this confluence of resistances, this previous high and the 50 DMA at 72.20. And the break above this is going to point to further gains. So, we had this RSI divergence, we had this nice wedge. Both of them ended up playing very nicely. Yesterday's candle was a very, very bullish one. It was an outside long white candle, which, you don't fade candles like this because very, very rarely you're going to see something top after creating such a candle. And, today it's already been a positive day. And as I said, we're testing the highs. I do think that if we actually break above this 2720 area, then we can easily extend, another 200 pips to the upside. I think that it's probably going to be a good opportunity to close this gap, because you know how gaps work. And we had left behind this gap that you find at 73. 75. So that's in essence exactly 150 more pips to the upside. And I do think that we are actually going to close that gap if we close above this 72.20, 72.30 area. Now, having to do with Kiwi against the dollar, it has now reached also an area of interest, a very, very important area. This is the confluence of a horizontal support resistance area. You can see it has played the big role multiple times in the past. It's the 50% fib of that last move lower. It's also the 200 daily moving average. You can't see it because it's exactly aligned with that 50% fib line, but the 200 daily moving average is also there. Add to that the fact that since we, in essence, had a double bottom possibility here, if we actually break above the 67.10, we also trigger a double bottom, in which case, very simplistically, if we extend the height of this formation, let's make it a different color, and we add it to the possible breakout point, as you see, that perfectly points to a full retracement to the beginning of that move lower at 69.40. So 67.10, key level, we break above it, next stop probably 69.40. Okay, so Kiwi and Kiwi Yen, both of them are really showing signs of life, and show good potential for more upside. The same deal here with the Aussie. Aussie approaching once again this important 70-20 confluence, because it's another confluence of resistances here. A break above 70-20 also points to further upside for the Aussie USD. I already did show the Aussie Yen, but the equivalent level for the Aussie Yen is a little bit higher, is roughly at 76-20, a break above there, also showing potential for more upside. So bottom line, Aussie Kiwi showing signs of life and are getting very, very close to the point that they can actually start even accelerating. Now, what does that mean for some of the crosses? Euro Aussie, for example, already had 4 consecutive down days. It's the least bearish one, I have to admit. So if I had to choose, I would go for one of the other ones. This is Euro Kiwi. Euro Kiwi, as you see, showing a different picture than the Euro Aussie. Euro Aussie still showing, possible constructive potential despite the move lower. Euro Kiwi, not so much, but unsurprisingly, Pound Aussie and Pound Kiwi are by far the weakest ones here. So as you see here, the Pound Aussie has already broken below a clearly corrective rebound and is currently testing previous lows. If we break below it, I'm pretty sure we're going to extend to the downside. I'm actually actively looking for opportunities to sell Pound Aussie and Pound Kiwi, and Pound Kiwi failed from 194 and currently testing horizontal support area, but I have to admit it looks very weak. And if Aussie and Kiwi end up breaking higher from the levels we saw, then I'm pretty sure that the crosses, the pound crosses, are also going to move lower against the Aussie and the Kiwi. Pound remains one of the weakest. Now, is there a possible constructive outlook for the pound? Yes, there is. Before I explain it, let me say that regardless of what I'm going to say now, in relative terms, the pound remains weaker than the vast majority of the major currencies that we're looking at, right? So I'm not advocating that somebody should choose to be long the pound in comparison to choosing something else, but I'm saying that even the pound has a possibility of rebounding, and that is a potential. Let me use the drawing tools that we have here. You can see a potential head and shoulders formation here, right? So 127.60, 127.70, quite a key area. If we break above it, we actually trigger an inverted head and shoulders formation here, which definitely points higher. How much higher? Considering that the low is at 125, 125.06. Okay, it's no big difference, and that the neckline is roughly, let's say, at 127.70. That indicates that an upside potential of roughly like 260, 270 pips is likely, which would point to this horizontal resistance area and 78.6 above 130. Okay, so even the pound has a technical formation that potentially points to further upside, but as I said, instead of jumping the gun, because this can end up being a consolidation before moving lower, we have to have evidence, and the evidence is a breakout from the neckline. Okay, so until that happens, this is just a potential trade, a potential technical outcome. Now, let's have a look at the pound yen. Let's have a look at it actually on the 4-hour chart first. Here it is. Pound yen, you can see the same deal here. I mean, so far, this has a big chance of being a bearish consolidation. Okay, this can easily just be interpreted as a triangle that will eventually break lower and continue to the downside. Now, if we do break above this descending trend line, then that can also be viewed as some kind of a short-term bottoming pattern. It depends on how it evolves. It can also play out as a potentially inverted head and shoulders formation. Of course, we need to do more for that to happen. We need to find resistance, then move a little bit lower, then craft a right shoulder, etc., etc. But what I'm trying to point out here too is no hard evidence yet that those are reversing higher. It might be happening in the next few days, but it can all end up being like bearish consolidations. Of course, the fate of what happens with those is also going to be dependent a lot on what happens with the DXY, which is here. Let's have a look at it on the daily chart. There it is. So the DXY, so far, this is the third consecutive day that we are stalling at this horizontal support resistance area, in this case acting as resistance. Even, as I said yesterday, even if we extend a little bit higher towards 96.60, where we find the 200 daily moving average, or a little bit higher than that at 96.75, where we find the broken ascending channels support, which might act as resistance, it's still very likely that we're going to get rejected and move higher. But the fact that so far, after 2.5 days of an effort, we haven't managed to to close above 96.30 is definitely a sign that dollar bears are, in the short term at least, in control of the situation. So I would be very, very careful trying to fade dollar strength unless we see some acceleration higher, and then we can start talking about a potential like ABC scenario that has already played out. I'm very skeptical about it, though. My intuition tells me that even if this is a corrective move lower, which is likely, the dollar would probably need to correct for a longer period of time for me to be satisfied that that's it. Okay, this is one of the reasons why I'm actively looking to buy dips, for example, in gold. As you see, gold is holding decently fine. It had, it had the day before yesterday, we ended up closing barely higher, although we were quite a lot higher in the day. Yesterday it was a bearish day. It was, we formed an evening star formation, which is a bearish reversal candlestick formation, actually, to be exact, because it's a 3 candlestick formation. So far today, we're holding more or less where we were. Silver, same deal, holding on the first area of support at 1510, 1515. So I wouldn't be surprised to see a continuation higher without even seeing much more downside from here. I'm not saying that it can't happen, because as long as we remain, for example, in gold above 1360, there is absolutely no reason to turn bearish. But from here, where we currently are, roughly at 1405 to 1360, there is still quite a lot of room, right? It's also, it's also going to depend on what kind of structure you have, because you can move down to 1360 within several days and doing it, slowly and in a fashion that looks corrective, or you can end up doing it, in a totally different way, like, accelerating lower and having consecutive bear candles and slicing through 1360 with momentum. Then we're talking about something totally different. But, unless something like that happens, I think that, buying the dips is the way to go. Copper, by the way, still pushing away from this resistance. So I'm still focused on what happens from here. As you know, it's also a good proxy for what is happening with risk. Speaking about risk, we've definitely seen a little bit of weakness from stocks, but so far there is nothing that, really makes it anything more than, short-term correction. Now, is this pullback over? Might need another leg lower, like something little like this, if you look at it on the daily chart, something like this. Okay. So I wouldn't be surprised if there was a little bit more downside before higher, but so far, I see nothing that would, make me bearish. Okay. I think that it still looks rather constructive. Price action looks rather constructive on the DJI, on the S&P, on the NASDAQ, as you see here. DAX, same deal. I still have my long here. It's at the money. So I think that, it would be probably jumping the gun trying to be short here, unless, something, comes up that really triggers some different kind of a sell-off, which we don't see yet. Now, I think I caught, my eye caught at some point, Blake, because we're trying to resolve some issues showing that there is a pennant here in the Euro USD. I have the exact same thing on my chart. It doesn't need to, don't need to be a rocket scientist to interpret this as a pennant. So it's not that I'm saying something profound, obviously. Any, decent technician would see that. And yeah, this is another reason why I would be looking for further dollar weakness, simply because Euro USD is simply consolidating near the highs and is telling me that it probably wants to move higher from here. And, if you have a look at the USD Swiss, you can see, of course, the opposite kind of technical formation, but so far something like that looks like a bear flag. Okay. So, looking at those as well, I see the exact same thing. I see bearish continuation potential. If I zoom out, you can see that since we found a high there, USD Swiss has been producing only two types of price action, two types only. One, rather small but clear impulses to the downside, and number two, consolidations. Okay. So you can see a consolidation here, an impulse lower, a consolidation here, an impulse lower, a consolidation here, another impulse, a consolidation, a larger impulse, and this looks like another corrective consolidation. So do I have any reason to believe that this is going to be resolved in a different way than the previous ones? The answer is absolutely not. I don't. Okay. Now, let's have a look, because it's also quite nicely correlated. I showed that several days ago. USD SEK. USD SEK, as you see, also a pair that has stalled during the past 3 days near the lows, but this price action, looks corrective as well. Might end up being a little pennant, might end up being a little flag, might end up being, something a little bit more complex, but as long as we are below this previous low at 937, I think that any rally for the USD SEK should also be sold. The fact that we also hit oversold levels in the RSI is a good testament to that fact. I mean, embrace oversold and overbought readings, because they're usually good indicators of, the direction of the trend. Okay. It's been mathematically proven over and over and over and over again that if you try to use momentum indicators to fade them and go against the trend, you're going to be losing money. Momentum indicators should not be faded unless you know very, very well what you're doing and you're trading short term, very short term. They should actually be used as confirmation for which is the direction of the trend, number one. And number two, to provide you good entry points in the direction of the trend. So for example, let's say that you have an oversold reading and then you have a rebound that from a technical perspective looks corrective, and you see the RSI rebounding towards, let's say, 40, 35, 40, 50. And then you see the RSI also rolling over from such a reading, which is usually a good place to find resistance in a bear market. Then, that's another indication that, okay, this is where I should be selling. Okay. So as I said, don't use momentum indicators to try to fade the trend. Unless you know very well what you're doing, you're going to find yourself, hurt. Let me see, by the way, if we have any questions. Do you only spot divergence on RSI? It was exactly what I was talking about. No, I don't use RSI only to spot divergence. I use RSI to have a fast and easy indication of momentum, and momentum equals trend. Okay. In the vast majority of the cases, the strength of the momentum is in the direction of the trend. So RSI is a very good indicator of where the trend is. As I said before, it's also a good guide to help you, along with whatever technical information you get on the chart itself. Keep in mind, by the way, one thing I forgot. You can also have technical analysis done on the RSI, and it actually works quite fine. So let me show it to you as an example. On this chart, there are better examples, but since we're on this chart and I have it here, as you see, we had this descending trend line resistance on the RSI. Okay, so this descending trend line resistance that I have with this intermittent red line here, once it got penetrated to the upside, which if you see, it was here actually. So we broke above this trend line resistance at the same time that on the chart, we were breaking out on the USD SEC from this horizontal resistance area. And as you see, if you had actually used this as an extra indication that momentum is accelerating to the upside, you would have gotten yourself a nice breakout entry here at 910. And, there was a lot more upside to come in the days and weeks ahead. Okay. So RSI can also be used in this way. Okay. If the daily double bottom completes on the Kiwi, it becomes a double bottom on the weekly. Let me see what you're talking about. Yeah, now I see what you're talking about. You're talking about this one, right? Then we have a rectangle on the weekly, and then we're testing resistance. I agree with you, but one thing at a time. Yes, I agree with you. If we make it higher towards 69 cents, then yes, we're talking about a rectangle here. As you see, I have these trend lines since a long time ago, these areas actually. So yes, a break above 69 cents then triggers out a much bigger formation on the Kiwi. I agree with you. But let's take it, one formation at a time, right? Yes, there is a bigger formation here. And if we do make it up there, and if we do break above there, then yes, there is potential for a lot more upside. I'm 100% with you. Forgot to give an update yesterday on the USD NOK, since I still have a position here. I view this price action as purely consolidation. So far, we have an inside day to an inside day today. This tells me that there is more weakness likely ahead, and I'm still going to be holding this to reach my ultimate target, which is at 840, 841. Okay, so use the NOK more or less showing the same thing, that probably there is more US dollar weakness to come. Okay. See more questions. Crude. Yeah, my pleasure, mate. Ken. Crude, there we go. So, crude. I think it's better if I show crude on the 4-hour chart, and you'll understand why. Crude has had a very strong move higher, unquestionably. It has started showing signs of slowdown of momentum, though, since a few days ago. And here it is. And here we are on the 4-hour chart, consolidating at the target of this rectangle. Once we broke above it, the rectangle's target was at 58.80 something. We pushed higher towards this previous high. We're now consolidating once again. So if we fail to break down, there is likely more upside, but I wouldn't be expecting it to be a lot more before we see some type of a pullback, likely towards 57.50. So this is more or less what I would be expecting. As you see, we also have clear RSI divergence, which in essence validates what, you can see by the eye what I said, that there is already a clear loss of momentum, that does not equal a trend change, okay? The short-term trend, I repeat, the short-term trend remains to the upside, okay? The fact that momentum has been slowing is not an indication of a reversal. It's just an indication that perhaps a reversal is closer than before. That's it. So I would expect that it's likely that we're going to get rejected anywhere between, here and 60.50, and then pullback. Now, then we have to analyze the nature of the pullback before we can, make more deductions. Okay. Let me see. Hello, I'm not sure of gold threshold reachable for next month you have recommended. I see this from Adrian coming in quite early during the webinar, so I'm not sure if you were referring to something that Blake said. If you could write again and explain a little bit, please, so I know, what threshold you're referring to exactly. Then I will be able to answer. Yes, we have now fixed all the problems, by the way. We just, had another person doing the streaming today because Velu, that is doing that all year long, is now on a 2-week vacation. So, a little bit of adapting. Okay. Coach, do we have an interview today?
We do, buddy.
Who do we have?
Garrett Patton. He's with Avi Gilbert.
Okay. Is he around?
He is here.
Okay, perfect. I think I've covered everything that people have asked for.
How about EG before you go?
Oh, absolutely.
Because I think it's topping here.
Here it is.
Okay. See how earlier in the week we just took out previous highs by a few pips.
As you see, yeah, we do have a loss of momentum here. And also keep in mind what I was saying yesterday about EG. And this we have to have a look at on the daily chart. Keep in mind that even if we penetrated through this resistance area, which on a daily closing basis we haven't managed to do so,
right?
The descending channel's resistance was just 50 pips above, right?
Yeah.
And it's hard for me to envision, after all this move from below 85 cents to 90 cents, that we would have the momentum to even penetrate through that and continue, you know what I mean? So yes, I think that even if Euro Pound ends up moving a lot higher and breaking above this descending channel, which is likely, I do think that it is definitely very likely to correct lower to begin with before making such a move.
Yeah, I'd be very happy with your red line target on a pullback here.
Yeah, that is what I'm looking for, actually.
And then a breakout next time to the upside.
Yeah. It is very, very likely because as you see, this long-term descending channel is very, very indicative of corrective price action. I would be very, very surprised after seeing this price action and the previous impulsive move higher if eventually the Euro Pound didn't break to the upside. I would be very surprised from a technical perspective. I'm completely leaving aside fundamentals. I'm just, looking at it from a technical perspective.
Right.
Because having to do with fundamentals, I think it's a fool's errand to try to assume what's going to happen, because as you know very well, Brexit developments are very binary in nature. So we can have like a very positive or a very negative development that will, move the pound a lot lower or a lot higher in a short period of time. So, why try to, to guess? I mean, this is casino. It's not,
Yeah, just technical here, looking for one decent pullback. In fact, it kind of reminds me a little bit of what's happening right now in Aussie Kiwi, where we are back at the 61.8 level
at
now.
a very larger scale, of course, the euro pound and the Aussie Kiwi, of course.
Yeah.
But you can see equivalent patterns all over the board. Don't forget that an equivalent pattern we had some time ago in the bunds, right? A very long term, even a lot longer term than this euro pound move. Bunds were correcting lower in a large channel. You can see it
Before they exploded.
Here. So a multi-year correction, right?
Yeah.
I mean, from 2016 to December 2018, okay?
Yeah.
And then after breaking higher from there, that's it. Goodbye,
Yeah.
kiss it goodbye.
Right.
And, everything was working in the right direction here. I mean, we are breaking out from a multi-year correction at the beginning of a new year. So, that was a great trade.
Thank you, bro.
My pleasure.
Okay, Garrett. Want to welcome you back. I'm promoting you to panelist now, Garrett. Let's see if you're muted. I'm going to unmute you, and perhaps you could share your screen.
Yeah, give me 1 second here. I'm actually not familiar with this software.
Yeah, you just hover your mouse around where you have the volume thing, and it'll say share screen, and then you select it.
You share or share, something like that. It's a green button that says share.
At the bottom.
All right.
Okay,
Did I do it?
Beautiful.
Okay,
You
perfect.
Yeah.
Got it. Thank you so much, Garrett.
Yeah, thank you again for having me.
I want to acknowledge that when you were here, do you remember what month you were here, Garrett?
Off the top of my head, I do not.
Okay, but I do remember we were trading under 1300.
Yeah, I think it was somewhere maybe back April or May.
Yeah, and you had a count. The reason I remember it is because you showed a breakout happening over the 1375 level, and us trading above 1400. It looks like the wave count has shifted, maybe because of the nature of the advance to this is just the completion of wave one, and you're looking for a two now. So you think that we have had a peak as of Monday, and we're going to start moving lower, but that's not the end of the bull move. It's just beginning. This is just wave one. Am I interpreting it right?
Yes, I do believe at the time I had the same count, but the target was 1375 for this wave one, looking for a 5-wave structure to complete off of the August 2018 low before that wave two pullback. So the nature of the advance that we did get, and the strength that we saw, the overachievement here that has brought it up to that next fib at 1429, has forced me to consider that perhaps we're already in a large degree third wave as well. So,
I think I recall it was above 1375, that count. I mean, look, who could remember counts that we had months ago, right? And then you showed it, and I think pulling back to really around the same levels, maybe a little lower, but 61.8 is viable for a wave two. That would take it to 1260. Do you look for, but it looks like your preferred is maybe back to 38% at 13.25, which would be one heck of a shakeout for people that bought the breakout at 1375, right?
Right. That's the pretty standard target region for wave two pullback, a 382 to 618 retrace at the size of wave one. And yes, I would be leaning towards the upper end of that support region.
Okay. So do you use Motive Wave? Is this Motive Wave the software you use? Or
yes.
you come? Okay. I just have a question because I know some other traders that use it. Before you had Motive Wave, you had to, come up with all your counts yourself, right? And
Well, I still do all my counts manually. I don't use any of the auto wave features at all.
okay, so just for showing, what do you use Motive Wave for then?
It's just much easier to do counts rather than a simple text tool.
Okay,
It
so it
allows
doesn't
you
make you
to quickly
lazy.
draw up counts. And I really like the way that it calculates fibs on the logarithmic scale
Okay,
compared to other software.
okay,
The difference is that there's not really a difference in calculation in other softwares when you switch from arithmetic to logarithmic scale, whereas on Motive Wave, there is a difference. And I think it does it the correct way.
okay, interesting. So it's it's an embellishment of what you're doing anyway, and it's a time saver for you, right?
Right. It makes my job a lot easier.
Okay, so I mean, but you're not reliant upon the counts and the harmonics that pop up from it. You still do that on your own. What do you do if what you see is different than what Motive Wave puts out there?
Quite honest, I don't even ever really look at what it puts out. The only time that I'll see that is if, for example, I just use the feature to decompose, just to quickly put the labels on. And sometimes in this instance, it did put it where I would have put it as well. But more often than not, I have to adjust the placement. It just quickly draws the labels for me to save time.
Okay, so I think that there's a relationship with U.S. dollar yen and gold, and so if you're looking for a pullback here in gold, 38% back, what's your count look like on U.S. dollar yen?
Let me switch over to that real quick, but before
Sure.
I do so,
Okay.
I just wanted to take a look at the smaller time frame here on gold and just
Okay.
explain quickly what I'm looking for to kind of confirm that we will get that larger pullback as the wave 2.
I see. Okay.
So what I'm watching is support here between 1397, which is getting tested this morning,
Right.
and 1378. And this is
Okay.
the standard support region if you were to draw an impulse from the May 30th low that would hold as a fourth wave to set up another high as a fifth. So I really want to see this support region here taken out. So basically sustained move below 1378 to firmly put those probabilities in favor of the larger wave 2 pullback.
Okay.
Until then, the potential to see another extension higher up to 1479 is something I have to consider.
Okay, excellent. So really same type of line in the sand based on Elliott and based on conventional technical analysis that 1375 comes into play for an extended correction. And,
Right.
I don't know what you do with your, what you have underneath. It looks like you use RSI and you use a 13 period. Any reason why you went to a 13 period, Garrett?
Just Fibonacci numbers.
Okay. All right. And the MACD. So at the high, we had a little, do you use it for divergence, or I like using RSI for when I get confirmed highs.
Right.
To me, that means that, markets rarely top when momentum's confirming the move, both on bottoms and tops. Do you use these tools for looking for divergences to line up with your counts?
Exactly, yeah. So I want to see divergence on fifth waves, on C waves, etc., where I expect to see a turn in the market. If there's no divergence, then obviously, as you said, that makes seeing a turn there more questionable.
Okay. A great look on gold. Can we go to US dollar yen? And
yeah, definitely. So what I'm watching here on the US dollar is the support that price just hit here. And that support was a measured move of the initial drop down from the May high here. So if you measure this move that I have labeled as an A wave projected from the top of the bounce as the B wave, it hit an exact 100% extension at the recent low and has started to turn back up. So that's a very common target, a measured move for a corrective ABC structure, which means that this pullback could be setting up another trip to the upside before we get a more significant top if we continue to hold this support here that we recently tested.
okay.
And that could take us up to around 99 or so. to finish off this final move and the overall rally off of the February 2018 low.
Okay, and 99.44. But I noticed that. Are you doing time projections as well on your work? Because it looks like you're looking for this towards the end of 2019, the dollar to finish on a pretty strong note. If this count works out, are you doing Fibonacci time work? How are you projecting potential cycles?
I'm not doing any Fibonacci time work. The placement of my labels is usually just a very rough estimate.
Okay.
Elliott wave theory is pretty much based on price alone.
Right.
The only real timing aspect that you consider is the rough proportions of wave structures in comparison to each other. And, you know, if you're familiar with Elliott wave theory and you've done it for a while, you kind of get a rough idea of what the length of that move should look like on the chart. So aside from that, again, just very rough estimate. I'm more concerned with price than I am the timing aspect.
Okay, so if the dollar has a chance to be putting in a low here, if we just take out the lows that we have here temporarily, what does that turn the dollar into? Does that take new highs off the table if we take out this week's low? Or could we rally to 97 first and then take out this week's lows marginally and still turn back to the upside?
Marginally, yes. What would really remove new highs from the table for me would be a break back below this January low at the beginning of the year at 95.
Okay, 95 is a line in the sand for Garrett Patton. All right, thank you so much for that. I'm assuming if there's going to be some dollar strength, that there's going to be some U.S. dollar yen strength, yen weakness. What's your roadmap look like there?
On the yen, it's actually not something that I cover really. We do have a Forex service on our site that I'm not a part of. I mean, I cover so many other charts that just the bandwidth, it's hard for me to cover.
Okay, well, let's go geo then. Let's go geo with what's been happening in oil. We had that huge sell-off from 66.5 down to about 51, and we've had a nice recovery here. Is this a rally that you're looking to fade up here? It looks like
it is, yep. So my expectation is that since we struck that high back in April, that we're beginning a C wave of a larger corrective A, B, and C down from the high that was hit in October of 2018.
Okay.
So the nature of the drop that we got from the high in April, looking like a three-wave structure, suggests that C wave is going to unfold as an ending diagonal. So each of the subwaves here within the actionary waves would also decompose into three-wave structures.
Okay, so this is actually going to take out the lows. This can be new lows for the move, even back to 2017, and it's going to take out this January low. So a lot of weakness in crude. There has been some correlation, although it's kind of broken down between what's happening with energy and what's happening with stock indexes. So we have made new highs up at this recent marginal new highs in S&Ps. I know that you guys are very active in S&Ps. I've seen some of Avi's work. I think the last one I saw, he said there was a trapdoor, and we did get a decline, but you know, he talks about once you get a decline, you can just follow it down, and if directions change, you get out of the way. So we did have this very sharp rebound. What's your view on stock indexes now?
Right. I'm still somewhat of a stubborn bear here. Still not seeing enough evidence out there across various different charts that I follow to strongly support a sustained breakout. So I'm continuing to view, based on the LA wave count and based on various other charts that I track, a top approaching for a very significant correction. And that top is a third wave within the larger impulse back from the bull market beginning here in 2009. So if you see here these labels, the 1, 2 as the start to that larger impulse, the move up since that low that we hit in 2011 being the entire third wave, and now I'm looking for that fourth wave within the impulse to take us back to an ideal target of roughly 2,200 or slightly underneath there.
Okay.
But
Yeah.
near term, there is the potential for one more gas buyer here. If this support region, and I switched to the ES charts,
Yeah.
the numbers may be slightly different here, but
Okay.
if this support region here between 2925 and 2900 is able to hold, then I can see one more move higher and attempt to test around 3000.
Yeah, the big
before that
round
top.
number, psychological number. Okay, so that's interesting. While that's going on, I happen to think that the bigger bubble, and I know it's contrarian, is in the treasury market. And to me, it's starting to look like it has, at least for a correction, somewhat imminent in it, and wondering what your view is on either TLT or the 10-year yield or TLT. Okay.
TLT, yeah, we can take a quick look there, and then I'll also take a look at the 10-year.
Okay.
But I do agree that we're relatively overbought here. I mean, we have some significant negative divergence on technicals. Right. It does look like a pullback or kind of reset here is likely to be seen, but I'm not convinced that upside is completely finished. And actually,
okay.
if I do switch
so we get
that,
a 4 and then another blast. So maybe we get a 4 while the S&Ps are blowing up towards the 3,000 level, and then once we have a peak, bonds will be a buy again and S&Ps a short. What do you think of that theory?
I mean, it's always nice to see those markets kind of move in unison and correlation, but it's not required, yeah, for my work. I usually try to gauge or treat each market on its own merits and by itself. So.
Okay, and I see you have like a 180 target. Wow, yeah. So rates lower for longer based on your work, buddy.
A little off my rocker here as far as my expectations for the 10-year, but I actually believe that we can head a lot lower in rates over the next several years.
We won't be negative like Europe, but
not quite negative, but yeah. I see quite a few people thinking that the bottom we hit in 2016 was a significant bottom in it, as far as this downtrend that we've had since the 80s. So I'm not so convinced that we've put in that bottom yet.
Okay, so maybe we're either bottoming here to get a B, or you still think A is going to be lower at 170?
So that 4 and 5 on the TLT chart would be the 4 or 5 to complete the C of the A, and then the large bounce is the B for filling out the rest of the structure down.
Okay. Do you have any what you would call fairly high conviction? I mean, I think everything that you see, you have conviction, but for me, at times, everything seems to be lining up that gives me stronger conviction. Not that they end up being right, but you and your team, what kind of themes are you working now that we're completing the second quarter here and heading into the third quarter type trades during the summer that I think we're going to have another quiet summer or increased volatility during the summer. So people should, postpone their trip to the Hamptons. What do you think, buddy?
Yeah, I would say kind of our two major themes right now are down in equities, looking for that primary wave for correction.
Okay.
And further upside in precious metals overall, with this wave 2 aside here.
Okay. Do you do any work with the gold-silver ratio? I believe gold-silver ratio has recently made a new all-time high. How do you explain the relative weakness in silver wave structure-wise compared to gold?
My colleague who I work with in the miner service on our site, he looks at that ratio more often than I do.
Okay.
But usually, if I'm not mistaken, when silver is outperforming is typically when metals perform the best. Is that correct?
Yeah. It's more of an reflation trade because of silver having an industrial component to it. And poor man's gold gets too expensive. Everyone moves to silver, poor man's gold. So, anything the poor man buys doesn't work until, the final stages where it really gets in gear. But I was wondering if you had what your structure would be here on silver. So you think this could be a 4 as long as we hold this 1480 or so level?
Right. So, I mean, obviously, silver has bounced as well off the May low, but not participated nearly to the same enthusiasm that gold has.
Okay.
So the Elliott wave count here definitely it can be a little bit different and would match slightly better with this red potential here that I showed you earlier on the gold chart.
Okay.
But to get 5 waves up off of the May low, I need to see another move higher as this 5th wave here. This really only counts well as 3 waves so far.
Right.
So holding a 4th wave and getting another high as a 5th wave would really improve odds that silver is also going to participate in a much larger move to the upside, where we have a 1-2-1-2 off of the low that was hit last year.
Okay, interesting. So the precious metals still have a possibility of a resumption of a bull market after a pullback. I'm saying that Dr. Copper had its PhD taken away for misrepresenting itself as a bull market for a while. And yeah, okay. So again, the industrial take 240 as a target for you, and you still think there might be some more left on this bear market, this bounce that we've had from 262.
Right. Copper is definitely not positioned in nearly as convincing of an immediate upside pattern compared especially to gold, but silver as well. It's questionable for me whether or not we have completed the downside. I do think that it's very close to putting it a bottom. If we do see further downside, it may just be close to a double bottom, a retest of that 2.53 level, or the fib that these 2 prior lows came very shy of reaching. But potentially even extending as low as 2.38, depending on the size of the next move lower. But that changes for me if we can get a move above 2.79. That's what really starts to shift those probabilities more strongly in favor of that low that was hit at the beginning of the year being an actual more sustainable bottom, and this possible 1-2 start to a new move to the upside, a new impulse to the upside that you see as the alt count there.
Okay. So I think we've covered a lot of different markets. Anything else you'd like to wrap it with, and perhaps, show where people could find you during the day, Garrett? And, this is a time for a little bit of a commercial for you guys as a thank you from me and us for you coming here and edifying our community.
Yeah, I'll do that. Now, let me quickly take a look at GDX first, just since we didn't touch upon that yet.
All right.
So I do think that the real opportunity, if we are starting a significant move to the upside in precious metals, is really going to be in the minor stocks. Those have the potential to really outperform to the upside if we continue to show strength in gold and silver. So
Wow,
I'm kind of looking
long term. Yeah.
Kind of looking at something similar to the possibilities that I was showing you in gold.
Right.
That same 1-2 here would match with the 1-2 in gold before a very powerful 3rd wave to the upside. But there are quite a few individual mining stocks that would fit this red count, which is a larger leading diagonal where we get a more shallow pullback as this B wave maybe just closed the gap that we saw earlier in the month. Before heading up to around 29.75 next as this wave C of 3, then a 4-5 from there, and that completes an even larger wave 1.
Okay, so would you classify it, since you cover the miners, that it's the majors, blue chip golds, that are resembling that pattern more than the juniors?
The GDXJ has more silver miners in it, which why it's kind of lagging a little bit in the upside. And yeah, I do think that the majors are more sensitive to the price of gold, whereas those very, very micro cap mining stocks, a lot of the movement sometimes is on management things or
Debt.
Geopolitical issues or debt. Exactly.
Nationalizing mines.
Right.
There's always something. So that's something in this kind of world where, leadership, volatility, etc., tariffs, etc. Do you feel safe buying miners that are outside of, say, North America? You feel comfortable with miners that have their mines in Mexico and other geo spots in the world, or more comfortable with things that are happening in North America?
I'm a technical trader, so I trade based off of the chart rather than more fundamental issues. But I would be at least a little bit mindful, yes, of those geopolitical risks when you have mines in countries that aren't necessarily as welcoming or accepting of some of
Right.
the,
You have
the companies there.
you have a couple names that you follow and trade for yourself?
Yeah, we actually cover quite a few miners in our miner service on the site. I can pull up everybody's favorite Barrick,
Okay.
which would fit that red count. The price structure on this fits the red count. So this looks like a larger leading diagonal in development off of the low that we hit last year. But the bigger picture thing here is that we have this really strong structure off of the 2015 low that itself can be a large degree 1 and 2, which means that this could be the start of a much larger third wave that eventually takes us,
Wow.
all the way back above the highs that we hit in 2011. So really do see quite a bit of opportunity in gold miners, assuming that these charts and counts continue to cooperate. So I'm kind of excited.
Yeah, I mean,
for
you're
the
projecting
opportunity
way
there.
out there, 2032. Let's see, that's 13 years. Hope to see Barrick at 150.
Right, and again, just rough estimate as far as the timing goes. More
Yeah.
concerned about those price levels, but
I'm more
yeah.
concerned about making it to 2032. Young guys like you don't. You're immortal right now. So, Garrett, another great presentation. If you want to show your website, and do you moderate and coach and work in a chat room during the day, and what hours are you there?
Yeah, so our site is elliottwavetrader.net, and we
Wanna
do
show it?
have, I got to figure out how to do this. Software, sorry.
It's okay.
That do it?
That did it. Okay, so you're showing your chat room now?
Right, yeah, so you should see our chat room. We have a number of different services that we offer. We basically cover all markets, Forex, precious metals, crude oil and different commodities, mining stocks, other just regular equity stocks, world
Okay.
markets. So the services that I'm part of are world markets. I run that by myself.
Okay.
The mining stocks portfolio and stock waves. And we
Okay.
also I do a live video 3 times a day where we go over those markets that you saw on my motive wave setup, the SPX,
Okay.
gold, silver, GDX, crude oil, and US dollar. Then I also take requests for those who are joining. And we offer a 15-day free trial, no credit card required. So if you just want to come check us out, please do so and see if it's something that you like and could help you with your trading.
Thank you, Garrett, my trading warrior brother, for coming back, and congratulations on that gold call to above 1400, and really appreciate your roadmaps that you showed us all here in FACE today. And it's my hope that pips rain down on you like hitting a vein in a major mine, and you just go down there and you don't even have to dig it out. It's falling on the ground like nuggets of gold. And so really appreciate your contribution to our community today, Garrett.
Thank you, and thank you for having me again.
All right, we'll do it again down the road. Okay, bro?
Yeah, sounds good.
Okay, Garrett, everyone, that's Garrett Patton. You could also follow him on Twitter at Garrett Patton, and that's spelled GarrettPatten. Correct, Garrett?
Yes.
All right. That's a wrap for us, everyone. Remember, don't just count your pips, count your blessings. And we'll see everyone to wrap up the week, TGIF. Good hunting the rest of the day. Thank you, Garrett Patton, for hanging out with me today.
Thanks again.
All right, buddy.